All right, bet. So this is today's date is April 19th, 2026. Sensei here. Um in my last version of this. Next time you guys probably will see me will be 2027. I'm gonna look like a completely different person. I'm just gonna be different. And it's gonna be a lot of fun. I'm so excited. So today, I'm gonna give you guys everything. This is everything that I know. Okay? So let's think about this for a second, right? So what are we dealing with? So as we may know, we are all traders in here. Drop in the chat what kind of trading do you trade? Like what market is like your thing? Is it forex? Is it futures? Is it options? Is it stocks? Drop in the chat what is your go-to trading like market that you invest into? Futures all day. Okay, for sure. Options and futures. Options, long-term investing, options, futures. That's good. That's good. That's what's up. Forex, Forex. That's what's up, Forex. All right. So we got everything but Forex. Yeah, you know what I mean? Compounding the internet, right? So it's so funny. I love that because I want you guys to think about trading like this. And this is how I've been able to teach at this level. We are all relatable than we are different. Like that's a life principle. We are way more similar than we are different. Meaning between me and my girl Steph, the only difference between me and her is that we're male and female, but we're human at the end of the day. What if trading is very similar to that first principle? That we are very similar, but just we communicate different. For example, the only difference between options, futures, and forex is just how it's counted. From pips to points to percentages. But guess what? All of you have to have in order for y'all to take a trade market structure. All of you have to have a candlestick pattern to take a trade. All of you have to have some kind of analysis that has to be applied. Some strategy has to be applied, but the difference is just how it's counted. But the how you approach the trade, what kind of candlestick pattern you look for, what kind of market structure that's formed, couldn't you not take what you have in one and apply it in all three? You guys are all trading the same New York session. Riddle me this. Drop what currency pair or what asset you trade or what contract you trade. Your favorite one. If you just had to say, this is my go-to, that when I wake up in the morning, I take a trade, I'm trading this. All right, ADJPY, NAS, MES, probably SPX, NQ, GJ, gold. All right, bet. QQQ and MNQ. All right, bet. So I'm gonna tell you guys like this, right? This is my boy Billy. My boy Billy is exactly the point. Ooh, excuse me. We are all trading. We are all trading global markets all at once. Bless me. So think about it like this, right? Money is being moved. Ooh, that should be it. My goodness. All right. Money is moving all the time throughout the day, 365 days a year. All right. Money is in constant motion. All right. You know what's also in constant motion as money is moving? Time. So check this out, right? Time is also moving at the speed at which money is moving. When time is clicking, money is moving. That's why time is money. Literally, time is money. As time is moving forward, there is some bit financial transaction happening at the same time. You guys know that there's over quadrillions of dollars moved a day. globally, or we're not talking the trading markets. We're talking business transactions, debit cards, Zells, Cash Apps, PayPals, Venmos, quadrillions of dollars a day being moved all at once. We are just doing this. As traders, we're coming after this. This little sliver of that quadrillions of dollars. We're this little sliver of that can make us rich. Drop a one in the chat if you can absolutely just fathom that. That we are out of a quadrillion of dollars, a little sliver of that can get us rich. A sliver, gang. A sliver. And because of that sliver, why are you tripping when you lose? That right there is the problem. Because we're so focused on that sliver and we don't understand the big picture, that's why we trip when we lose. Because you don't know what kind of pot you're messing with. You don't know how big the pot is. So let me tell you how big this pot is, all right? Everybody around the world. Okay, so I work for JP Morgan. Around the world, everybody has a thing called a central bank. Okay, these central banks allows for us to move money across the country, across the globe. So if you split the globe into three thirds, you have the Asian side of the world, you have London, and then you got New York, United States. You kind of got Europe, Africa, then you got Asia, and then you got the Americas. If you guys didn't know, those actual regions are categorized in the financial world. That's called EMEA, EMEA. You got EMEA, you got APAC, and you got LATAM. I don't know if you guys know what that is. LATAM, LATAM. Then you got EMEA, which is EMEA, and then you got APAC, which is APAC. Right? Those are the regions that the financial institutions like to categorize themselves, especially when it comes to banking. Okay? Now, with the central banks involved, okay? So you have the major institutions like Wells Fargo, Chase, big those are big banks. But here's the thing. Those banks don't have banks everywhere. Okay? So if you guys don't know that certain countries like Iran and Venezuela and North Korea and Cuba, they don't have central banks. That's why we're bombing them. So when you understand why central banks are there, here's another thing there's a problem with that. There's a thing called an intermediary bank that has to step in. So when you have countries like the United States and the UK, and think about the 8 major currencies that you trade in the Forex market. What are they? The Great British Pound, they have a central bank. JPY, they got a central bank. So all the 8 major currencies you're trading in the Forex market all have major banks. That's why you're trading majors. Here, listen to what I'm telling you. The majors that you're trading in the Forex market are the 8 central banks that control the global currencies. You're trading the global currencies of the world. In the 8 major currencies are the 8 major central banks that move the money globally. Now, the reason why you have an exotic in the Forex market, that's when you have intermediary banks like the peso steps into place. That's when the peso comes in. Why is the peso considered an exotic? Because their volume that they circulate as a currency is not enough to compete in the larger markets like the US dollar and the JPY. It has nothing to do of currency strength. It has everything to do with how much volume that currency is circulating in the global market space. That, my friends, as Forex traders, that is the pot you're dealing with. And when you're dealing with that pot and you look at a currency pair, you're trading the relation that that currency has with another. So when you're studying economic news such as PPI or CPI or cash rates or interest rates in the Forex market, you need to understand how the relation between one currency and the other move in price, because that is going to help you identify how a trend is formed in the Forex market. When you're looking at a pair like GJ and it sells on you, what you're really actually seeing is that the Japanese yen for that period of time is now stronger in relation to the Great British Pound. And here's a good kicker to this. It's not doing that randomly. If you're a Forex trader, I'm gonna get to my options and future people, but my options and future people, pay attention to how this works because your US market that you're trading in is definitely being affected by the foreign exchange pairs that I'm talking about right now. So I hope you're taking notes. So check this out. Now, with that being said, what if I told you that the foreign exchange pairs that you're trading also are moving in correlation with the time zone that they're located in the globe? So here's for an example. Have you ever traded a currency pair or have you ever traded an asset and for whatever reason it just moves during a certain time of the day and you don't know why? Drop a 4 in the chat if you just were trading one day. You're like, oh wow, I just figured out that GJ just moves around 7 o'clock. Oh, I'm trading MES and it just so happens that it trades around what? 9:30. For my options traders, you guys figure out that your QQQs and your NVIDIAs, what time do they trade during the day? Around 9 o'clock, right? So, but think about how did you figure that out? It's because you kept what? Studying. You kept trading at that same time. While you're trading at a certain time, the institutions are moving money at the certain times. So the way that the money is gonna move is this. If you're in the Asian market, all right, if you're in the Asian market, that's everybody from like Japan, North Korea down to like Australia, New Zealand, all that stuff, okay? So the Asian markets move like this. All that collection of money, okay? So that is my JPY pairs, that is my JPYs, that is my NZDs, that is my AUDs. All those currencies, all right, they're gonna trade during the day. Okay, so for my US people, those Japanese companies like Toyota and Nissan and things like that, you want to pay attention to when those Asian markets are affected by what? The chips. So if anybody on here is my stock investors or my option traders, especially you love to trade like Tesla and Nvidia, you guys have to understand that those Asian markets are very important for your semiconductors. So in order for Nvidia and Tesla and AMD and all these tech companies to get up and running, they need those semiconductors over in those Asian markets like Taiwan and Singapore and all that stuff. So you have to pay attention to when those Asian markets do something. Because if something pops off over there in Asia, you are going to see a reflection of that the next morning in New York. Do you understand? So if something goes down in Asia, right? So if something goes down in Asia, over in the Asian markets, when you're talking about any of the factories that go down, we're talking Toyota, we're talking Tesla, we're talking Nvidia, we're talking Nissan, we're talking AMD, we're talking a lot of these chips and stuff that goes into the iRobots that's in our house, right? So if anybody has one of those little robot things that clean your floors, those chips come from Korea. They come from, okay, ladies, a lot of your beauty brands. Sorry, a lot of your beauty brands, they come from Korea. That skin glass stuff that gets your skin glowing, that comes from adrenochrome from Korean babies. I'm sorry, they take the blood out the Korean baby after they cry, and then they get that blood and sweat and they mix it together. They make it into the oil they sell to you in the United States. The whole movie of Monsters Inc. is about it. Monsters Inc. is literally the whole story of adrenochrome and scaring babies and getting kids, and that's how you get beautiful. That's how you get everlasting skin. Look at all the celebrities. All right. So that's why I pay attention to the Asian markets because if something goes down in Asia, it's going to affect the United States. You guys, let's not forget World War II now. What happened in World War II? What happened in World War II, guys? Nagasaki and Hiroshima. Let's not forget we dropped the biggest bombs over there. And you know what's crazy? Nagasaki and Hiroshima were Christian cities in Japan. They were the only two Christian cities in Japan. We bombed them. And then after we bombed them, here's how crazy United States is. After we bombed them, we got them to agree to an agreement back in 1945, Bretton Woods Agreement. So now whatever the Japan markets do, they are indebted to the United States. So that's why you see Donald Trump with that Asian lady, the prime minister, because the United States and Japan are like this. They're locked in step because of World War II. So that's why for all of my tech people, if something goes down in Asia, it's going to affect your market in New York. It's going to 1,000%. So if you pay attention to Nvidia, to Tesla, to AMD, those market spaces are huge. China is a big deal. So let's don't look at them as like oh, they're gonna war and battle. Look at it from an economic standpoint. What would they do to the US markets? Because you guys are trading them, all my options people. For my forex people, you just study the strength. All right. So the Japanese yen for sure is naturally going to gain more strength during the Asian market. And for all of my traders, the Asian market is in between the times of 6 o'clock Eastern to 3 a.m. From 6 to 3 is all the Asian markets. So if you're a gold trader, if you're a GJ trader, if you're an AJ trader, if you're an NJ trader, you get your bag in the Asian market. That is your time to shine. For my gold traders, for yeah, 6 Eastern. 6 Eastern to 3 a.m. It's gonna be 2 Central, 2 a.m. Central to 5. So it's gonna be 5 to 2. All right, so 5 to 2. Okay, that is the Asian market. Now, do not split those up. I know for my forex traders, you're gonna be like, oh, I thought there's Sydney and Tokyo. Guys, the Sydney and Tokyo market is not that strong in liquidity in order for those markets to move individual on their own. Combine them together, you'll get a lot more volume moved out of them. All right, you're gonna get a lot more volume moved out of them that way. All right, that's gonna be for the Asian market. All right, drop a 70 if you're with me so far. We're moving around the globe. Who's getting the full picture? Like I said, I'm gonna give you guys the full picture, and you guys are about to see this on the charts. This is how I get a bag, y'all. This is how I get a bag. Okay. All right. Investment opportunities. Like I'm just gonna teach you guys in the way that I only know how. Asian markets. If you guys are looking at an Asian market company, there is a Chinese car company called XPEV. XPEV. I'm going long on them. They are the number one Chinese car company coming out of China. Like they are rivaling Tesla in the astounding of technology that's going out there. I'm putting money on them. Like they're right now, their share is less than what, $25 a share. I'm going long on XPAV next 3 to 5 years. Cool. XPAV. That's my long-term investment. All right, moving into Europe. Okay. Europe and Africa, y'all, is a mess in the Middle East. Okay. Yes or no in the chat. Can we agree that right now, the Middle East and all things oil is a mess. Like, drop a yes or no in the chat. This whole Strait of the Hormuz and Trump and all this stuff is giving you a fat headache. It's just like, what the heck are we talking about? Like, who's got their head scratching? You're like, what is happening? Like, one day my gas prices are like $4. The next day they like 2.99. Oh man. And then like, is it who? Okay. Now, I know just a little joke, but who has seen the funny little Lego memes? Who's seen those Lego videos that have been going around the internet? I know this is one little pause. Who is seeing those little Lego videos that they have been going out? They're kind of funny. They're actually kind of funny. Okay. How do I teach you? Okay, yeah, fire, right? Put me on. Yeah, man, look, just look up Lego videos, Lego propaganda, and they're pretty hilarious. And they're pretty on point. That's the funny part. All right. So let's talk about Europe. Europe and Africa and how they play a role in all of your guys' markets. So for my Forex traders, we're talking the euro, we're talking the Great British Pound, we're talking the Swiss franc. All right, let's focus on those for now. We're talking the Swiss franc, okay? We're talking the euro, and we're talking the Great British Pound. So let's start with the Swiss franc and how they play a role in this. So does everybody understand? Drop a 2 in the chat if we remember from history class that Switzerland was a neutral country during World War I and World War II. Right? Drop a 2 in the chat if we remember learning that Switzerland was always a neutral country in their battles. Like they never really got to war. Now, a lot of us may not know, well, why? Well, why was Switzerland such a huge thing? Is it because, Switzerland, that's where the Red Cross started? there was a whole storyline about, oh, Switzerland's the home of the Red Cross. That's where the Red Cross started. No. Ladies and gentlemen, Switzerland was the location of the it is called the it's the Bank of it's the BIS. Oh my gosh, it is the Bureau of International something. Let me type it in right here. It is called the BIS. Write this down. Okay. The Bank for International Settlements. There we go. Write this down. It is called the Bank of International Settlements. The BIS, the Bank of International Settlements, is the central banks of all banks. Okay, so during World War II and World War I, they were the money hub of both sides of the Allies and the Nazi regime. Okay, because the Allies were getting funded by the Rothschilds and Adolf Hitler was getting funded by the Rothschilds. So both sides were getting funded. But in order to fund both sides of the war, you needed a central location in the smack of middle of Europe, geographically, that you can put your money in. So they built the Bank of International Settlements. Look those guys up. They are a big deal. They also are the ones that created the IMF, the International Monetary Fund. The reason why the IMF is a big deal is because the IMF has Africa in a chokehold when it comes to all their natural resources. So I know I got people on here from Tanzania, from Kenya, from Ghana. The reason why Botswana can't make no money on their diamonds. There's a reason why Libya and Gaddafi got taken down when they was trying to get their gold. There's a reason why South Africa had to put Nelson Mandela, who was a 32-degree Freemason, by the way. So Nelson Mandela's whole story is about Freemasonry, and he was a 32-degree Mason. That's why you have the Mandela effect, because he was a wizard in the Freemasons. Anyway, that's where the whole Mandela effect came from, because he was 32 second degree Mason. Shout out to the IMF for funding that, and the Bank of International Settlements for pushing that. And now that goes into the ECB. If you guys don't know who the ECB is, that is the European Central Bank. The ECB runs all European currencies. That's why there's over 16 to 20 countries in Europe that all adopted the euro. So if you're trading Euro AUD, Euro GBP, that's why the euro in volume is so large. It's because it's not one country. It's 14 countries, 14, 15 countries that all adopted the euro thanks to the Rothschilds and all the central banks in Paris, Warsaw, Poland, that started World War II, Eastern Europe, all the way to Spain and into Portugal. So now, ladies and gentlemen, you're trading the Euro JPY. The bigger picture, you're trading 14 to 15 countries, different economies at once. So when you're looking at how many pips you're catching, there's a reason why I'm going to tell you guys tonight to begin thinking in process mindset. Think of it in a process-like mindset, not in a P&L. Your profit does not matter anymore in trading. If there's one thing I will tell you, your profit, stop thinking about your profit, because I promise you, as an institutional trader, as the banks, they don't care about profit. They care about processes. What is the process that they are putting into? That is going to make the money. That's why they invest so much into infrastructures, into industries, into AI, is because they care about systems and protocols. Their profit is you. They know the profit is going to be you, but they don't care about it right now. They care about what system is the cheapest, the fastest, and that gives me the most money. That is what they're thinking about. So if you as a trader can think about it like this, what processes can I implement to do that? Why I'm giving you guys this big picture is so you guys know what you're messing with. Is because now, if you know you're messing with the ECB, when you're studying news, you need to pay attention to interest rates. You need to get on your phone and set up a calendar of every time your currency bank is coming out with interest rates. All 8 major currencies come out with interest rates. Figure out when your currency has their interest rates. I promise you that is a 200 to 500 pip move every time. For the past 7 years, it does that. If you want to make 200 to 500 pips in a single news trade, know when your country's interest rates will come out, and you'll bank every time. All right, Europe. This is another thing you got to pay attention to. The Great British Pound. Now, why does the euro and the GBP, why are they together? Do we not remember? Let's think about, didn't Great Britain have the biggest navy that we've ever seen ever? according to history. That's what they said, right? Didn't we all learn that the British Navy was the bad boys of the ocean? They went everywhere. They was traveling everywhere, right? They went to Americas. They was down in Africa. They was down everywhere. They had the big naval ships. They were so big in military size. But remember, didn't they not have a thing called the Queen? The royal monarchy? So, the pound, which was originally called the sterling, which the sterling made silver very valuable. Okay, so gold was a big thing in Africa. Okay? Gold was a big thing in Africa, like Libya, Iraq. Okay, okay, look. I want you guys to see this. I just want you guys to see this. Map of the world. I just want you guys to look at this really quickly and tell me if I'm crazy in just thinking about this, right? Let's look at a map of the world, geographical. Because I want to see like the deserts. I want to see like the oceans. Let's look at some of these images. Something always struck me odd. I just want you guys to ever realize this. Have you guys ever looked at a map of the world and you ever asked yourself, wow, when it comes to our wealth, the world's wealth, gold, silver, diamonds, anything of rare earth minerals or anything that has to do with diamonds, gold, silver, like anything of minerals and metals, it just so happens that all the beef happens right here. Let me change the color of this. For whatever reason, all the beef just happens right up here. It's like every major battle happens somewhere in this region. Tell me if I'm lying. I don't know. We had the Iraq war. We got the Iran war right now. You got Israel and Palestine. You got Libya that took out Gaddafi. You got Morocco and Algeria over here. You got the whole Mediterranean Sea right here. But it's so crazy that yet the driest area on earth, where there's the most desert, is where we're always fighting the most wars. Does this not make this doesn't always makes me wonder what is over here? Why are we always fighting wars over here? What's the interest? It's the wealth. It's the wealth. There's minerals over here. Gold, silver. Why did we go to Libya in the first place? To take all the gold from Gaddafi. Why are we over in Gaza right now? Military operations. Why are we in the Strait of Hormuz in the first place? For economics, money. Where's all of our world's oil coming from, y'all? Right in Saudi Arabia. So if I'm a trader and I'm trading the London session all the way up here, wouldn't it be for me advantageous? Would it be for advantageous to understand what kind of economics are happening in this region of the world? Because by default, both the Asian markets and the European markets are going to be naturally affected by what's happening right at their next doorstep. It's going to be smart for me to understand what's happening there because a third of all the oil in the world is coming from the Strait of Hormuz, y'all. But yeah, we can go right here over to Cuba and Canada and get our own. Oh, wait, that's what Donald Trump is doing right now. He's about to go attack Cuba. And so he can make the Gulf of America a ginormous gas station. I don't know if you guys knew that. That's actually what's about to go down. In the next about year and a half, the Gulf of America and Cuba and Venezuela and Central America will all be taken over by the United States. And this area will become a major port for all things oil. The Gulf of America will now become the United States will become a giant gas station after we're done over here. That's just what's about to go down. Which goes into my next part. All right. So anyway, drop a 6 in the chat if you're with me so far. Drop a 6 if you're with me. Drop a 6 if you're with me. I was like, I know I'm trying to give you guys a lot of economics and the behind the scenes and the stuff behind what's going down because because I value the why so much. We just how do we get here is where we know where we're going. And I'm sorry, even as who I am as a man, it's hard for me to accept a lot of the ugly truths of the world. That there are legit people who literally run this thing. And I'm sorry, they just do. And they happen to ride with juice box. They just do. If just follow the money long enough, it just happens that way. I'm sorry, you can one Wikipedia search can save your life. One Wikipedia search. Seriously. You know what I'm saying? So the hardest thing you're about to accept right now is the US markets. It's about to get messy on what I'm going to talk about here. So a few things we got to understand about the US dollar. Okay, so this is about the US dollar. Okay, I'm giving you guys a little history lesson, but we're going to see this on the charts in a second. So, how did the US dollar get to where it is now? So we got to go all the way back to before World War One. Who remembers the Louisiana Purchase when we bought this whole big chunk of land from France? Okay, we're going to start there. Okay, so the Louisiana Purchase, the only reason Louisiana Purchase happened is because Napoleon Bonaparte, who was over here in France, right? We remember the French Revolution? We learned about that in history class, right? We learned about this small little midget looking dude who was mad at everybody named Little Napoleon Bonaparte, right? He was a mad little short little dude on a horse and he wanted to kill people. That was not the truth. What people don't understand is that France was in debt to the Rothschilds for over $2 million. The entire country of France was in debt to the Rothschilds for $2 million. So when Napoleon, funded by the Rothschilds, by the way, he was also funded by the Rothschilds, came into power, he found out that he owned land in the United States called Louisiana. And he said, well, let me just sell it to a dude named Abraham Lincoln for $3 million. Boom, Louisiana Purchase happens. Napoleon pockets that $3 million. He pays off the Rothschilds. France, for the first time since like 1821 or something like that, is now debt free to the central banks of the Rothschilds. Napoleon takes that extra $1 million, raises an army of people, and then sparks the French Revolution. So the whole French Revolution was the story about Napoleon taking out the central banks that was also funding him. So when news got out, the French sent ships over to America. And that's when the French started settling down here in the South. That's where you get Louisiana, the French quarters, the Deep South, right? Because the French was heavily involved in the South. So they started propping up propaganda, saying the propaganda was that Napoleon has taken over France. He's a radical leader. He's a radical evil dude. So the story, the propaganda was getting spread to the United States. So that a whole bunch of rich folk started coming together and started trying to take out the current presidents. So for those who don't know, John Quincy Adams, the second U.S. president, I think it was John Adams, not John Quincy. John Adams, the second U.S. president, wanted to create his own currency, his own U.S. currency. But the central banks over in Europe that just got taken over by Napoleon sent their troops down to the South and was like, heck no. Yeah, we don't want that. We got a radical Napoleon dude who just took out one of our own. And now we can't have that. So John Quincy Adams was sent to be assassinated. down in the Deep South. And then Abraham Lincoln came around and created something called the greenback. The greenback was going to give the rights to the citizens of America the ability to have their own wealth. But the powers that can be didn't want that. So they hired John Wilkes Booth, who was a Jewish dude, who was a Jewish play actor. His daddy was a politician from Europe. And John Wilkes Booth was paid to hire to kill Abraham Lincoln. So now that the greenback couldn't go into print, and so that's how we got, guess what? The currency that we have today. So fast forward a few more years after Abraham Lincoln gets assassinated. That's why the Emancipation Proclamation really wasn't a time when the slaves were free. That's why we celebrate Juneteenth in the first place. Because the Emancipation Proclamation was a propaganda stunt to fool the people of the North that the slaves were free. But the South was like, we still got hold on them. That's why 1843 is a big deal. But remember, what was also down there in Georgia? Jekyll Island, right there in Georgia. So you got some deep Southerners super mad at Abe Lincoln for writing up the Emancipation Proclamation, freeing all of our slave labor. That's a lot of money, y'all. If I'm a deep South slave runner who's 9 times out of 10 Jewish because the slave ships were also Jew-owned, we can't have that. So what are we going to do? We're going to meet up on 1913 on an island called Jekyll Island. We going to meet up. J.P. Morgan, and 8 and 7 other guys. They all meet up together, right? What happened in 1912, ladies and gentlemen? The Titanic. Right? So we remember the Titanic in 1912, right? The ship, the big ship that was financed by J.P. Morgan, called the Titanic, which never was really sunk by a iceberg, by the way. There was explosions on the boat, but that's another rabbit hole we can get into later. But the whole point is because there were some rich people on that Titanic. There were some rich people on the Titanic that opposed the central banks. These were friends of Abe Lincoln. So those rich people got on that boat, got assassinated. All the guys to 1913 got together. The book is called The Creature of Jekyll Island. You can read it. And the Federal Reserve was then founded. Then the Federal Reserve came around and started printing out money all across the United States. And yet the very dollar bill that we have today, funny enough, the very dollar bill that we have today, if you guys ever looked at the dollar bill, you guys know that pyramid with that little eye right here at the top? Y'all know that little pyramid with the eye? You know what I'm saying? We could look it up right now. But Aaron, what does this all have to do with trading? What does this all have to do with trading? Money has everything to do with trading. How your money moves and how it works is how you now know where money's going. So you guys know about this dollar bill. You guys know about this pyramid right here. Thanks to, I don't know if you guys know who FDR is. Y'all remember FDR? FDR? Franklin Delano Roosevelt. Wasn't he like what, president for like 4 years, 4 terms? Had polio and all that joint. I think that was him, right? Oh yeah, he was a 32-degree Mason as well. And he was the one who actually put the sigil on the dollar bill. If you guys don't know, if you circle this, the O, the N, and the M, and I drew the Star of David across the dollar bill itself, you guys will see of who we are, of where this country is. Any of you guys know there's 13 stars here for the 13 families. 12 thing on the olive branch. 9. This is an upside down American flag. This is a double-sided phoenix. They just took the other head away. So this is not what our money used to be. It's now literally being run. So with that being said, what does this matter about trading? How does this really apply? It's because now that you understand that the powers that can be, which is the dollar, rule the world and all the global currencies, this allows for you, ladies and gentlemen, to have a New York session that generates $1 trillion a session. A session. Trillions of dollars are moved to the US. You know why? Because the banks here and the banks here that are owned by the same institutions are moving their money from one area to the next area. And once it's done, it gets rotated right back to the same pockets. That's how the money's being moved. Wars, economics, rare earth minerals, all that kind of stuff on the news. And you're like, what is really happening? What you're seeing in real time is just money being moved from pockets in central banks all across the world. And we get to see the trading between these times. So, for all my dollar folk, for all my stock market traders, for all my options traders, for all of my futures traders, for all of my gold traders, anything that involves the US dollar, right? You need to be paying attention between the times of right here, 8 a.m. to 9:30 a.m. You can be in Central, you can be in Eastern, you can be whatever. All right? It don't matter what time that is. You need to be around in this time because here's what's going to happen. So, when the European markets close for the day, the European markets are also interlapping in the United States markets, right? We understand this because there's only like what, a 6-hour difference? It's like a 6-hour difference between the markets, the times. But do you guys know about this little line that runs right in the middle of the earth? Right in the chat, what is that line that moves in the middle of the earth? GMT. What is GMT? But what is GMT though? What's the line that runs in the middle of the earth? Right smack in the middle. It's not the equator, it's the what? What's the other line? Not the polar. Greenwich. Yes, Apendo, it is Greenwich. What is But what did we learn in 4th grade geography class? What is it called? 0 degrees Celsius. It's 0 degrees longitude. 0 degrees, right? We know this is the equator. But what's the line that goes up and down, north to south? There we go, Quinn. The prime meridian. Exactly. The prime meridian. You know why the prime meridian is important? It's because that's where all of your UTC charts are from. So the whole UTC on all of your trading view charts is based off of the prime meridian that's based over here in London, in Europe. That's why most of your favorite trading influencers like Trades by Side, Q Banks, Alex G, that's why a lot of your favorite traders, your favorite educators, or most Forex brokers, some of your unregulated Forex brokers, some of your unregulated futures brokers, no wonder they're located mostly right here in this little peninsula. Why? Because they're closest to real-time price by the prime meridian. That's why your guys' brokers over here are located in Europe. That's why they don't accept direct deposit or wire for their deposit methods. They only accept what? Bitcoin. They only accept Bitcoin because they're unregulated, but they're nearest real time. And that's why most of your favorite trading influencers and most rich people live near the prime meridian. Italy, Venice, Greece, Spain, Portugal, the UK, Tanzania right here. Dubai's right next near current time. Like, we got to see where we just know that a lot of the wealth and money is being moved here. So if we know that the UK markets, these European markets are also being right on the prime meridian and they're closest to price, then we know that the euro markets and the US dollar markets, when they cross over, the volume and the volatility is going to be carried into it, which means that you guys are going to be trading in a period which is called the US London crossover. The US London crossover is the most profitable, volatile time of the day for all markets. If you're a futures, stock options, Forex trader, and you trade during the US market time, your time to catch the biggest bag for a trade anywhere is between the hours of 8 to 1. And that's really it. That's all you really got. Because the move that is going to distribute, which we're going to talk about next, the move that you're actually catching is most volatile during this time. Because the European banks, they're starting to close, and the US markets are now moving into their afternoons and moving over to the West Coast. Because when it's 1 o'clock Eastern Standard, isn't it typically what? 10 to 11 over in LA. So everybody in the West Coast got to get their trade, and then everybody over here in Hawaii got to get their money. You feel me? So from 8 to 1, that is the most opportune time to get your bag. All right, how are we feeling so far? Scale of 1 to 10. Are we learning something? Are we appreciating the knowledge? How do we feel so far? This is, like I said, I'm giving you guys big picture stuff. It's a lot I'm throwing at you guys. All right, so what are we dealing with? So I know we're dealing with a lot of stuff. So what are we dealing with now? So let's talk about current market. And I like to do this map. I think this map is really helpful. So you guys just know like who are the players in this whole thing. Okay, so who is the players in this entire thing? How are they all interacting? What's really going down? Okay, so all right. So let's take this a step further. So during when I look at history and I look at the economics of different presidencies that we have, so right now we have Donald Trump. All right, so Donald Trump, you know what I mean? He is Republican. All right, he's a Republican president. During Republican presidencies, typically tech companies or businesses involved around infrastructure, like how would I say it? Manufacturing, technologies, anything that has to do with building the backbone of the United States are going to rise. So this can be steel, oil, gas, metals, natural resources. Those kind of things become volatile when you have a Republican president. And I put tech in this mix. I mean, not tech, I'll be very clear, not social tech, financial and software tech. So think about the behind the scenes behind technology. Those kind of industries boom when you have a Republican president. When you have a Democratic president, social services or feel good economies, boom. These are your Targets, your Starbucks, your Walmarts. You know what I mean? Your beauty brands, your fitness brands, your social trend brands like Snapchat, Facebook, those kind of brand companies. You know what I mean? Very social people, because typically Democrats are more sociable, right? They care about social problems. Typically, those businesses and business owners, they lean to be bullish around this time. So, what does that mean for you? When you're day trading, you're going to be day trading this. So you day trade these industries. You buy, sell, and hold these industries. Does this make sense? So while the tech, the oil, the gas, and all those kind of businesses, and they're volatile and they're moving, that is not the time to be buying and holding those. You're not that volatility. That is a great time to day trade because now you can just catch the put options or the call options now. You can just get a bag. But then when you get the bag there, you can divest into the beauty industries, the social brands, because I'm sorry, Facebook, Instagram, Meta, they're not really growing right now. They're not making money. because they're not being pumped by what? The federal government, social media trends, and just, I'm gonna be honest, for all of my black women on the call, black women lead social trends when it comes to financial institutions. The banks love to look at how black women spend their money in order to know when the next societal trend is going. So they use black women's spending power to measure social trends and where their money is going to go. So right now, the biggest money spender amongst women in general is going to be the health industry, right? These are your GLP-1s, right? Your GLP-1s. These are your what's the other stuff? Ozempic, right? Isn't that kind of the leading conversations around news right now? The GOPs, didn't we not have Serena Williams as a Super Bowl commercial? One of the most fit athletes of the world is advertising GLP. That doesn't the or Hollywood actors and actresses who have money to spend on trainers, to spend money on red light therapies and saunas are advertising a shot into my side so I can lose weight. I don't know if that really adds up. However, it doesn't have to add up because you know what's not because you know what's happening behind the scenes. I'm gonna give you guys two companies that you guys can go all in for the next 3 to 5 years. Hims, for example, Eli Lilly, and RX. Those are three long-term swing companies that all of their revenues have spiked to thousands of percentages. Their revenues for all of them are exploding, but yet their stock prices have only jumped by 100%. When you have a disparity like this between stock companies, that this share price is going to catch up. So catch these at they low. These are the ones you buy and sell, and there's a term called dollar cost average. So think about your 9 to 5 job, and you know, remember your mom and dad, shout out to my mom, right? My mom and dad always said, a part of your paycheck from your 9 to 5 needs to go in your 401k every 2 weeks. Because at some point you're going to live off that because that was what their generation was told from their mommies and daddies, which is okay, which was passed down by the Federal Reserve, which gives businesses tax breaks. That's why the 401k is there. The 401k gives companies tax breaks. The more 401ks a company sells, the more tax breaks and tax revenue they don't have to pay. That's why you see these big companies don't pay billions of tax dollars every single tax year. And yet we as the normal people get mad at them like, oh, why are they only paying taxes? It's because their 401ks they're offering to their customers and because they have really good lawyers who read the tax code. Wait, they created the tax code. So they're leveraging a tax code that they created. Makes sense to me. If you're a rich person, of course you're not going to want to pay taxes. You created the system. Duh. So, why get mad as a consumer? Just learn the system that they created. They created the tax codes. Why don't we just learn the system that they created? I mean, we can use it to our advantage. So, RX, Hims, Eli Lilly. I'm going big on Hims. That's kind of my go-to. I like Hims. Hims is huge. Hims, Hers, Blue Chew. If you guys don't know, most male advertisements right now is literally about sex, like Blue Chew pills, alcohol, and sports betting. Is literally all the commercials males are getting right now. Some kind of sports betting app, something about Blue Chew, or something about alcohol. And then the women, guess what the women are getting? Mental health commercials like Better Health and Rory, celebrity endorsement gummies from Kourtney Kardashian and GLP-1s and those kind of brands like Zepbound and Ozempic. Or they're getting beauty brands like try on some new kind of clothes or some kind of new shopping or spending money. Or some kind of cologne or some kind of Mary Kay ad, some kind of Maybelline eyelash commercial. It's pretty much for women, menopause health. Yeah, for women, it really is about health. They're selling health. Oh, you can't get healthy if you just eat the right foods. You can get healthy if you take all of our medicine. That's pretty much what the advertisement for women is. If you want to feel better as a woman, take all of our pills. wow. I think our men are being over sexualized and women are being over drugged. It's crazy. Wow. If you really think about it, men are being over sexualized and women are being over pilled. Huh. Well, anywho, because we're in that kind of economy, this is unfortunate. Because we're in that kind of economy, health brands like Hims, Eli Lilly, RxRx, those are the ones you're gonna go stock and hold into. Another ETF you guys can go big on the wall in. If you guys haven't heard of LVMH, they own all the designer brands in the globe. Gucci, Louis Vuitton, Prada. You wanna buy like rich people? Buy the ETF that owns them all. And then Berkshire Hathaway, Warren Buffett. Can't go wrong. Get yourself some dividends. All right. So we're gonna get into the charts because now I want to show you guys, like, because now we're about an hour in, and I wanted because I give you guys a little bit big of the big picture, what we're dealing with, kind of where we are. And now when we're on the charts, it's now going to teach you guys how to be able to see this in real time and then know what kind of indications that you guys can find to see this money movement. So to kind of recap of what I kind of drew here, because this was a lot, and I apologize. Right now, we are in a Republican ran economy. So you guys need to be day trading the tech companies. Tesla, Nvidia, AMD, QQQ, those are good assets to day trade because there's a lot of volume pumped in them when you have a Republican president. When you have a Republican president, once you make money in these markets, you want to go ahead and long-term invest into the beauty companies like Hims, RxRx. I'll give you guys a couple more investments. Silver, silver, copper. F it. Let me just give you guys all the long-term investments I'm going into. Let's rock out. Copper, silver, Hims, RxRx. I'm going long-term into quantum computing. Get your hands on some quantum computing long-term stocks. Uranium as well. Rare earth minerals, MP is a one company. Rare earth minerals, MP, they're huge. What else? There's a couple more. Palantir, they're always still good. Rare earth minerals, MP, uranium, yeah, uranium, quantum computing, copper, silver, Hims, RxRx, Palantir, Bitcoin. Oh gosh, we can't forget about the cryptos. Bitcoin, Ethereum. XRP is a no-go. I'm not touching XRP. Sorry. Ondo, XRP is too hijacked by BlackRock. I don't want to go down that rabbit hole, but XRP is virtually BlackRock, and that's XRP is going to be XRP is going to be the cryptocurrency that's going to be used for the data centers. So the data centers that we're seeing around the country are just going to be big financial centers to push off the central bank's digital currencies. So yes, as much as they're joining economies, and yes, they're used for AI and stuff like that, they're just the blueprint for all things the universal basic income, which are UBIs. I won't go in that rabbit hole, but if you ever looked at anything Elon Musk has been tweeting about with Neuralink and universal basic income, that man Elon Musk is going to be the main leader to push that forward. So keep your eyes on that. Bitcoin, ETH, Ondo, big on those. Land, if you guys can get yourselves on land, specifically land around where the data centers are going, get yourself anywhere to 5 to 10 acres. That is where I'm gunning. I want 5 to 10 acres. Gun for that. Because any at 5 to 10 acres for land going around a data center, you can charge anywhere up to 500 bands, 500K to at least a smooth milli up more. These data center, they're just dropping money. If you get some land and hold on to it, you got some wealth. All right, land. Uh, there's a place called I think it's called Placer or something like that, but it's like a real estate thing where you can buy deeds and things like that. Anywho, start with these. These are good. These are good starts. Good starts, good starts. So MP, rare earth minerals, uranium, quantum computing, copper, silver, HIMS, RX, Palantir, Bitcoin, Ethereum, Ondo, land. Get you anywhere from 5 to 10 acres. You rock with that, you're pretty much set for the next 3 to 5 years. Any one of these things is finna jump. These are gonna run. Bitcoin's already sitting there, Ethereum hasn't said anything. Ondo is all things real estate. BlackRock. Uranium is all things Iran. That's the reason why Israel wants it. It's because uranium enrichment. This is for nuclear energy. Thank you. Oh my God, I can't believe I forgot about that. NEE. Good baller to go for. Nuclear energy. That is what's going on. I don't know if you guys have seen all those people getting killed, all those NASA scientists and stuff disappearing and getting killed. Yeah, that's all because of nuclear energy. Nuclear energy and quantum technology. Y'all, we used quantum technology to find a F-15 helicopter in the mountains of Iran when his ship got torn down, when his plane got taken out. Like, I don't know if you guys are just feeling what I'm feeling, but man, it's about to get spooky. So, anywho, let's get into the charts. I've held you guys a little bit too long, but I always say that. Like, I held you guys so long, but like, I don't know. This is my brain has just been going, y'all. So like, if you leave, if you come, like, I don't know. If you hanging out, like, man, drop a fire emoji chat if you just been just enjoying this. I don't know. I've been having a lot of fun. I just fire emojis in the chat, fives in the chat if you just been enjoying this, man. If you guys are just learning something, if this has just been helpful. I know we're about to get into the charts and stuff, but man, like, oh man, this is the fun part. Mom Dukes. Mom Dukes just texted me. She said, had to drop and go to work for the company that funds my 401k. I mean, it is what it is, man. It's like, don't have to get mad at the truth. Just accept the reality. The faster you accept reality, the faster you can find freedom, man. That's just the thing with trading. The faster you can accept the reality that you don't control anything that this market does, the quicker you become more of a profitable trader. Promise you. The faster you accept that you have no control over the outcome of this market, the faster you become a profitable trader. All of you guys, most of you guys, and a lot of traders struggle with profit based thinking. You think based off of your P&L, you think based off of your trading history that you think you're a trader. But if I asked you on a random day, what did you do to take this trade on a random day? Most traders could not tell me. Why? Is because you were so involved on how much money you made, not you weren't involved on the process on how you made your money. This is why most of social media and most of your telegrams and threads, they focus on the profits that they make. My mentee made $10,000 today. You should join my course. Oh, look at what my mentee profited today. It ain't about what you're learning. It's about how much you're making. And then their course, they're making money off of their course because they're showing you how much they're making from the trades they're taking, and you think that your results is going to match what you saw. Family, the results of your trading is going to be how disciplined your process becomes. The stronger the process, the more profitable you will become. Invest into your systems, not into your outcomes. The more you worry about your outcome, the less desirable outcome will react. This is where you guys got to learn processes. So, what is one of the number one processes of all trading from the very beginning? Is time. Time is everything in the game of trading. And I don't care who you are. Time is relevant. We can even let's add some currency pairs. I saw some GJ people. Let me add some Forex pairs. Because I can prove to you that time and price outweigh any technical analysis that you ever did. Because I will also prove to you that you're not a bad trader. No, it's not that you're a bad trader. It's just that you either have a bad bias or a bad entry. It's not you're a bad trader. It's because you're probably using that double top, double bottom, EMA, Bollinger Band, whatever it is, you're just probably just using it at the wrong location or at the wrong time or at the wrong part of your day. So I'll give you an example. Let's look at NAS 100. NAS 100 QQQ, right? This is one of my charts. Don't gotta, I promise you, you look at this and you go like, oh my God, Aaron, what am I looking at? Money. This it's a roadmap. I promise. It just looks like insaneness. But let me see if I find a chart that I can just, I marked up on all of these. QQQ maybe? MNQ? Nah, we'll do gold. Why not? Gold is a chart that I haven't marked up in a while. But I will teach you guys how time and price works. So, step number one of my strategy, technique, whatever, is you're going to drop down to the 30-minute time frame, whatever asset you're on. I don't care what asset it is. You guys can practice this. So we're just doing gold just because it's not the asset that I trade, but the mindset is still the same. So you're going to first drop down to the 30-minute time frame. All right. And you're going to go to Sunday open of last week. So when you're marking this stuff off, you always want to like to go back to Sunday open of last week. So I'm going to go back to April the 12th is when this all started. All right. So we're going to go to April the 12th and we're going to start here. So I'm located in Texas. So you're going to mark off those 3 times. The start of Asia. You're going to mark off the start of London. And now you're going to mark off the start of New York as well. Well, that's a little bit too far. So let me zoom in. All right, sorry, remove that. You got this. We need to find 2 a.m. And then we're going to find 8:30. All right. So that's step number 1 of my entire thing. As you go day by day, every day, by the day, you don't miss a day. You will do this every day. I do this every day. You mark off your times over and over and over. Now, what's the next step? After you mark off your times, you need to mark off the sessions, highs, and lows. So, for example, Asia has a low and a high. You're going to grab your horizontal rate tool and you're going to mark off the low and you're going to mark off the high of that session. Asia's high and Asia's low. Now, remember that whole picture of the globe, and I told you that money moves from one part of the earth to the next part of the earth to the other part of the earth? What you're watching is that money movement in real time. So when money's moving from the Asian markets over to the European markets, what price is going to do, it's going to go up and down during Asia, but then when price transitions into the European markets, the European market is either going to take out Asia's previous high or it's going to take out Asia's previous low as a part of its market structure. So with that being said, now you guys get to see that in real time. So when Asia formed a low and now formed a high, when the Asian markets opened up, price immediately took out Asia's high. So now we have to go ahead and continue the markup. When we continue the markup, you're going to mark off the London high as well, and you're going to mark off London low as well. And like I said, you're doing this on every asset, right? So this is not just on gold. You can do this on GJ, which we're going to do together, where you can do this. Stock options is a little different. I'm going to teach you guys a little technique with options. It's a little different than options. But for everybody else, you guys can pretty much follow along, right? So you mark off London. Now, with that being said, because London formed a low and a high, and price immediately got taken out from Asia, you got to delete it. So, I want you guys to look at something as well. This is now how you trade the New York session. So, hope you guys are taking notes because this is my trading models that has helped me become pretty profitable in the past few months. Model number 1. I like to call this an A1 setup, but this is what I like to call a seek and destroy. Or this is when you have 2 lows against 1 high. All right, so the Asian session formed a low, and then the London session formed a high and a low. So right now, think of it as you're just on the scoreboard, you got 2 highs. Let let me delete this, go back. You got two highs against one low. When Aaron Evans has a situation like this where I have two highs against one low, my bias for the day is bearish. I'm looking for sells. Now, I have two lows against one high. I had to look really quick. I was like, wait a minute. Either two lows, yeah, two lows against one high. That's wrong. About to give you guys wrong information. So let me rewrite this up. About to give you guys the wrong information. Thank you, Harlan, I was thinking about Harlan in the back of my mind. I'm like, I bet you Harlan like on my case. Like, that ain't right, Aaron. But anywho, so one high, you got to get two lows. All right, that makes a bear setup. There we go. That's a lot better. That's a lot better. All right, so you have two lows, two previous lows. You got an Asia low and a London low. I'm looking for bearish opportunities in the market for price to go down. Now, why is that? Why is that pretty much true for me coming into the game? Because the market likes to be in balance. So think about it, right? Think about it, right? The market right now is out of balance. The score is 2-1. Do these equal up to each other? No. So that means New York has to go clean house. So because there's two lows between one high, price is now stronger on the downside. So that means the liquidity or the draw on liquidity or the trend of that session is going to be more favored to which side has the higher number. So if I have two highs against one low, then you better believe that the New York session, look for buys. Look for a bullish move. Because guess who has more power coming in? Who has a higher number? If the highs coming into New York, if it's 2-1, look for buys. If it's 1-2, meaning you got two lows against one high, look for sells. If you got two highs against one low, you look for buys. So where are you going to take your entry? I like to look at this in a 4-step process. You got the open, you have the sweep, gap, entry. Open, sweep, gap, entry. You got the open of New York. You got the sweep of London's high or low. You have a fair value gap with a pullback entry. Either formed by market structure or by a candlestick pattern. That is my strategy. Open, sweep, fair value gap, entry. 4-step process every New York session. So how does this work in real time? I'm looking for this OSGE anywhere between the M5 to the M1 time frame. Yes, we're not taking, M15 entries here. This is we're getting nitty-gritty in this market. M5 or the M1, okay? Let's get our fingernails dirty. Let's not be scared of this market. Now that we know what they're doing, now that you know who controls, now you don't have to be afraid of it. All right? Isn't that in the book Outwitting the Devil? So, what is my rules in trading? Remember, when the market presents itself, okay, so when the market presents itself, it's going to, oh, I wish there was a way that we can just delete this stuff. Pencil, brush out there. I know there's an eraser tool somewhere to delete all these markups. I kind of wrote a lot on here. Apologies. But there's an eraser. I know there's an eraser on here. I know I'm not crazy. Yep. Yeah, something like that. And I can just erase it. Yeah, so we'll do. I need to erase a couple of these lines so we can see. Okay, here we go. So now that we're dealing with eraser, we'll add that onto my favorites and arrow. Okay. Rule number 1, I need to wait for the price to open. All right, so we're on the 5-minute time frame. We have London's high that was formed, and we have London's low. We'll make these lines a little bit accurate. Accuracy is key. Please be exact because it matters. Accuracy matters in this game. So because I have London high, London low, and we have Asia's low, my overall bias for today is going to be typically going to go bearish. All right. My overall bias, if I want an A1 setup, I want to look for sales. So what I'm going to do first, I'm going to wait for the open. So let's see if we drop down to the 3 minute because we may be able to get a actually way better probable entry on the 3 minute here. So let's go to the 3 minute time frame. Oh, we did. Oh, it looks great on the 3 minute. We might even be able to get it on the 1. And guess what I paid for, y'all? I paid for Telegram, so we're about to use the replay tool. I finally paid for it. I said we're about to use the replay tool, y'all, because you're about to see how this all happened in real time. It is so the concept, your entry technique here, guys, is called the AMD model. All right, it's called AMD. AMD stands for accumulation, manipulation, distribution. All right, this all happens inside of the S with the sweep. Okay, the letter S, I'm looking for an AMD concept to happen at the same time. So let's look at the market and where we would have found this in real time. So replay. Oh my God. Oh, so many years of me not paying for Telegram. I'm now using it. So let's watch it in real time. So we have London is forming. Replay speed. We'll do that. All right. Price opens. Okay. So when you have an aggressive push towards price like this, when price is going bullish, the first draw on liquidity, trading view? Yeah, trading view, sorry. The first, yeah, I'm sorry. Yeah, the first draw on liquidity is going to be the upside. All right, so price is going to be more bullish. So when you have a low going into a high and price, or even when you can do something like this, you can measure out a rectangle tool or a measuring tool like the ruler, and you see you have this white line or this arrow that's right across crossing my white line here in the middle. You can see that price when New York Open was on the upper half of this measurement, the first draw on liquidity is going to be on the upside. So let's go ahead and watch that let's go ahead and watch that replay happen. So now price, you're not in a trade, you're watching, you're waiting. You're waiting. You know that your bias is bearish for the day, but we don't know where we're going to get in yet. Pause. There's the draw on liquidity. So you see how price initially was bearish. That's the fake out. This is where people start entering the trade, selling gold. They put their stop losses above this wick, and the banks know that. Boom. They go ahead and do the fake out. You see this long wick above? That right there, ladies and gentlemen, would constitute as a liquidity sweep because watch what happens afterwards. So now you see how price went to London's high, not out of random, but because we marked it off. It went to London's high. Price went higher than London's high, but look at where the body of the candle closed. Is there a way we can go? Oh, yes. Pause. Okay. We can go one at a time. So we can actually just go bar by candlestick by candlestick. Okay. So let's go forward one. All right. There's the hit. Candlestick opens. There's the long wick above price. Collects the orders. Watch what happens next. Close below. Ladies and gentlemen, that is what is a liquidity sweep. Is when price swept above London's high. Okay, so what are the two? What's my strategy? Open. There's the S. There's the sweep we're looking for. Okay, now we're waiting. What's the next word? Everybody put in the chat. What's the next thing we're looking for? We got the open. We got the sweep. What's next? We need the gap. We need the gap to form. But what's also happening at the same time is an AMD concept. AMD is accumulation, manipulation, distribution. Price originally accumulated here, meaning that price consolidated and went sideways. Then price did an immediate upswing towards London's high, manipulating the stop losses and the orders that were set over here. This is the manipulation. Price manipulated up into the session high. So here's the manipulation. Now, watch what happens afterwards. Price opens, sells a little bit lower. Price comes down. You see this wick, but down below, that's a sign. That's something very key. You guys see how this wick price came down below? Watch what happens next. Okay. In the realm of trading, a lot of us right here would have been completely faked out because most beginner traders are like, oh, it hit an area of support. Right? Most of us will look at this as, oh, it hit support. Why? Because this candlestick wick hit below this low and closed higher. So I'm now going to go enter longs, and I'm going to go on the opposite side. And let me set my stop here. I got a 3-to-1 risk to ratio trade. That's not bad. That's not bad. But why would I have lost? The gap just formed. When you are trading an AMD concept, your fair value gap, you want to see it get formed near the accumulation. You want to see it get formed near previous accumulation. So when price, so now when we go to the next candle and it falls out, a fair value gap, ladies and gentlemen, is formed when 3 consecutive candlesticks in the same direction, the first and the third don't touch. So as an example, we have three bearish candlesticks in a row opposite of the sweep. So because we knew we have a bearish bias and we got a sweep to the upside, I'm bearish all the way now. And price has come back into this accumulation. But Aaron, where's the gap, bro? Ladies and gentlemen, the gap formed right here at the low of the first and the high of the third. Because these two candlestick wicks did not touch, we're looking for the letter E. And the letter E is now our entry. And where we enter is when price pulls back into the fair value gap that came back into the area of accumulation. So now watch what happens in the next few candlesticks. There's the rejection back into the zone. I take my entry. Stop loss above the wick of the sweet candle. Take profit at the opposite London low. Aaron Evans is in this setup. And now what we're going to watch is now price is going to respect that 1 minute fair value gap that we drew. I'm entering the trade. And now my targets are going to be the opposite end. Price retested the fair value gap again. This is another retest, another retest, another retest, another retest. You had 1, 2, 3, 4, 5 entries. All the way down. You entered in at 9 o'clock. My entry was at 9 a.m. And we'll see if we can speed this up a little. Eventually, price came all the way down and kissed London's low. I'm out. That's my trade of the day. Trade happened in 1 hour. That's all we got. I entered on the M1. The M5 or the M1, this can all happen. So, all of that preliminary work allow me the confidence to see this happen. The trade, ladies and gentlemen, all of this that you guys see here, this, ladies and gentlemen, is called the distribution phase. You enter in between the crossover of when price has been manipulating and then it starts distributing is where your entry is. You got the open, sweep, gap, entry, stop loss above the sweep candle, ride it to the other end. Or if you don't want to ride it to the other end, I'm either looking for 40 points a day, 40 points a day, 200 to 150 pips a day, 10 to 25% per contract. So, scale of 1 to 10, how do we feel? Pretty cool, right? How do we feel so far? Scale of 1 to 10. Do we like what we're seeing? Alrighty. So let's fast forward. So can we turn off the replay? I think we can. Leave. All right. So great setup. Great trade. We did what he needed to do. But now I want to give you guys a buy opportunity. So what we do if we went long? We need to see a buy, right? So a really good buy example that I have for you guys is actually when NAS, it was one of the NAS days, but we'll do a buy example on gold. Let's see if we have a buy opportunity here. Because that was a sell. But what if we have a buy? Let's see if we get a buy setup. Ooh, this is a good buy setup. Oh yeah, Asia coming into New York. London took off. New York kind of disappeared. Let's get, ooh. Oh, okay. I like this one. Check this out. Same rules apply. So this is still on gold. So 1700. Wait, let me show them the right time zone. Yep, Chicago, right time zone for me. 1700. 2 a.m. 8:30. Remember I said that gold is also very good during the is very good during the Asian market. Something else I want to show you guys as well. This is super cool, especially for gold. So let's say we did everything again from scratch, right? So we got the Asian market. We're going to mark off its high and low. So high, make that green for Asia. Mark off its low as well. Make that for Asia. We'll mark off London's. We'll make that the high. And then we'll make that the low. Okay. This is the second concept. All right. So this is the bullish concept when you're looking for buys. All right. This is going to be kind of hard for a lot of us to kind of accept. But there's going to be days where you're going to have to sit on your hands and allow for a session to pass by you, especially if you're a gold trader. If you're trading New York and things like that, there may be a day where gold may not move during the New York session, but it moves during the Asian session. So the setup may not happen during New York, but it may happen during Asia. And New York can just be a precursor to that. So, for example, let's look at this gold. Let's look at this gold. Let's look at this entire gold move, this whole gold move, and why this happened. So, first steps first. Remember, when you have, at the end of the day, you have a high, another high, and another low. We have two highs against one low heading into New York. So my bias for a better setup is going to be bullish. I'm looking for buys here. But maybe we may not get that. And here's what happened. So let's say we drop down to the 5-minute time frame because we're looking for an entry. If you were an advanced trader, you still could have done the same London high to London low concept that I did before. So for my advanced traders, let's drop down to the 1 minute and let me show you two trade opportunities. I'm going to show you the advanced entry, and then I would show you the preferred entry. All right, I'm going to show you both. The advanced entry versus your preferred entry. All right, so your advanced entry would have been this. Remember when I said before, when price is aggressive coming in, where's the draw on liquidity going to be first? So let me do the replay tool. All right. So we're in London session right now. London session is coming in. And we see that price is very aggressive coming in. We also can use our ruler tool. And we can also see that price is on the upper half of the London session. So we now know, please make the candlesticks bigger. Oh, yeah, sure. Yeah. Let me hide my watch list, actually. Do that. Move this here. Make these taller and spread these out like that. Okay. All right, this should be good. Make them a little taller. All right, so we have prices aggressive coming in. Where is the nearest draw liquidity going to be? Sitting right up here. Because price was bullish coming into London. It was aggressive. But we also have, ladies and gentlemen, accumulation. Do you see all this sideways choppiness? That's a big deal. Because what do you think is probably going to happen after this accumulation? What's after accumulation, y'all? Put in the chat. What's after the accumulation phase? We need the manipulation phase. And then we need price to distribute. So let's say we have this AMD model that's about to get played out. We don't know where, but it's going to happen sometime. So let's go ahead and just go 3 candlesticks per second. So we'll just play it out. All right, so then London decides to be aggressive and attack. All right, New York opens, and there's the attack towards the upper end. So we can see price was accumulated, and there's the attack. So we now know London's high is taken out. My rule is this. We know that we're looking for buys. We're not near London's low at all. But price is swept above. If I want to take a trade, we're still going to use that what? OSGE. Still applies. Here's the O. Here's now my S. We needed to wait for what? The G. Where's my G? Price keeps moving. In order for me to take a sell, I need price to gap down below London's low. Or London's high, rather. Price keeps playing around. Still not doing anything. Here we go. Boom. Price breaks below it. So we've broken out of the accumulation. We've broken out of this original consolidation. Price is broken up. Now we're going to see what happens. Now we're at London's low. So for everybody, all of your head and shoulder patterns, your double tops, you know what I mean? You like your double tops. This is where that stuff can start to apply. So now check this out. So let's say we continue moving forward. Where would AE take his trade? So a couple places I would have taken it. A good retest of London's high is a good entry. This is one spot you could have definitely taken to play. But it's not enough for me to be safe. It's a good spot, but it's not enough for me. Because I still really need that fair value gap to happen to feel comfortable. But what if I might be able on the 1 minute time frame, but what if I'm also on the 3 minute time frame? Wait a minute. Fair value gaps, guys, don't always have to happen on one time frame. They can happen on multiples. So look what happened on the 3 minute. Wick 1, Wick 2 didn't touch. And look where they also are located. Near my rectangle. I have a 3 minute bearish fair value gap that is now crossed back below London's high with bearish momentum. And we got the sweep with a bearish gap. Ladies and gentlemen, AE's taking my entry now. Yes, we're watching on the 1 minute and we didn't get it there, but if we got it on the 3, we got it on the 5. We almost got on the 5, but we damn for sure got on the 3. We got a bearish gap on the 3 minute. Look at the 30-minute time frame. We now have prices now being aggressive. We have broken this accumulation. Where price is getting ready to tank. This is aggressive price push back down below this high. Or you guys see this little inverse head and shoulder. Price is back below that neckline. We are selling. And aren't we still in a downtrend from Asia and London? Is still bearish from those two. This is where all those confluences start to add in. I bet you one of y'all EMAs is probably being touched right here. I bet you some of the EMAs getting smacked right here. But, okay, we're on the 3 minute. We drop down to, look at the 2. I like the 2 minute as well. 2 minute time frame is a great time frame to trade on as well if you pay for TradingView. But price did what? Open, sweep, gap below London's high. Entry. Stops below the what? Sweep above the high. Targets. Opposite low. That's the trade. Boom. Like, just like that. Open, sweep, gap, entry. Open, sweep, gap, entry. Open, sweep, gap, enter, target. Once price breaks below these structures, move your stops. This trade was almost 100, what is this? That's a good solid 60-some pips in gold. About 60-some points. All right. So with that being, so that right there, guys, that's the trade. That's one trade, but that's not even the trade if you wanted to take it. There was another setup that happened with gold anyway. Didn't we say we're looking for buys in the first place because we have a bullish London for Asia session? So let's say we didn't take this out. And let's say we missed the sell and we're still looking for buy opportunities. So where would I have taken my buy entry? Near London's low. So now you guys see how we have this original spike down here? Price is always going to come revisit any kind of long wick rejection like this. So with that being said, your eyeballs would have definitely paid attention to this low. Because now what also presented a long wick down here as well? London also. Anytime you guys have strong wick rejections like this is a good area of interest that you want to pay attention to. Because if price strongly rejects off this level once and twice, and it comes down off a third time, it's most likely going to revisit here and do one of two things. Price is either gonna go ahead and break from this level and continue, or it's gonna break past it and drop. So your eyeballs now is what we're gonna look for. Hopefully we can get a sweep of London. But remember, we got the sell opportunity. We already made money on this. But now we keep moving from here. So we see price is going to continue. It may not even give us the opportunity of entry, but let's look. All right, so price is selling. All right. It kind of moved it, but where is... Okay, it kind of moved it. Okay, so here's the start of Asia. So it didn't really touch London's low. Darn, that sucks. But wait a minute. Doesn't New York also form highs and lows? Wait a minute. What if I marked off New York's low? Could Asia just be couldn't Asia's job? Wait, so if London has a job to take out Asia's high or low, and then New York has a job to take out London's highs or lows, wouldn't Asia's job be to take out the nearest New York high or low to take a trade? So if we knew that the previous was bearish, and we have a Asia bullish, and we know New York could be bullish, what if our entry for Asia now could we be when price was near New York's low? So when price opened up for Asia this day, and you see how we are near these lows, the moment price would hit this area, you could have taken buys right here. So I know there's a gap in the day. So here's what you guys want to look for. Because when Asia gaps to the upside. So when Asia gaps like this, and you guys when you see this bullish gap like this happen, do not immediately buy. Wait. Please, for the love of God, wait for price to pull back to some area of structure near the gap. And then look for your entry of trades. So when price pulled back into this area and left this gap space and gave you a bullish candlestick reversal pattern out of it, which would have been the Morningstar candle, which is the 3 candlestick pattern reversal out, then you could have went long. And the reason why you could have trusted went long is because you're at lows. So even if price decided to do this, even if price decided to come low and take you out, you already know that we got 3 previous highs. We got some highs that we left behind. We got a New York high that's still left behind, and we got an Asia high all the way up here that still needs to be rectified. So you know the bullish play is still coming. Maybe price wants to dip first and then go up. It just may be that way. So let's watch what happens. Let's watch what happens. And then I'm gonna wrap it up and give you guys some option stuff as well. And so I know we did some Forex stuff, but I'm gonna give you guys some option stuff as well because this all applies. So now let's say we have price come in, price was bullish coming out. Now, boom. So you see how price, it didn't hit New York's low. So let's say you didn't take the setup at all. Let's say, nah, that's too risky. And I don't really trust myself. I don't want to take any of these sells. I don't want to take any of these buys down here. It's not part of the rules. It's not part of the open sweep entry candle. I don't like those rules. I want to trust. I want to do it the right way. Okay, great. So let's say you waited for price to come up to New York's high, right? Price is going to go somewhere. So price hit New York's high. Then you wait. Price New Year's high. Now we're into the Asian session. Pause. Let's say you didn't trust this. Let's say you didn't trust that gap. I'm looking at Dr. Quinn. I love using her as an example because she's the one with her camera on the whole time. So I'm using Dr. Quinn. Let's say Dr. Quinn's like, Aaron, I don't like that. That ain't it. I want to use that open sweep gap entry every time. Fair play. Fair play, Dr. Quinn. Here's your open. Guess where your sweep is? Guess where your gap is? So you have the sweep of the high. We'll change these to white. And then if you guys look, you have your head and shoulders. Head and shoulders. Bears channel. Bullish flag. Evening star candlestick pattern. Bearish engulfing. All of the technical patterns that we learned from like YouTube and all that kind of stuff, it's happening. But it's all about where it's happening. That's the lesson I want to give you guys. But that's really my strategy. Open, sweep, gap, entry. All right? Open, sweep, gap, entry. That's what I'm looking for all the time. All right? Now that that's my entry, where's my targets, Dr. Quinn? The opposite side. Where's my stop loss? Above the sweep candle. I'm targeting these lows, maybe 1 to 2, 1 to 2 risk ratio trade, 1 to 3. I'm taking these trades down. And from what I understand, I believe price that day did sell off. And I'm not trading gold. Gold is not my asset, y'all. This is a 1 to 5 risk to ratio trade here. So I don't even trade gold on the average, but this is a 1 to 5 risk to ratio trade. And I think this thing did go. I think it did run. I don't know if it did consolidate, but like my entries up here, stops are on the hill. I'm 1 to 2 now. Price is playing off of the fair value gap we've played before. Stops would have probably been break even by now. Still a decent little trade, but so now that's one trade. But let's say again, we don't trade the Asian session, right? So you took your Asian session trade and we're done, right? We clapped out 1 to 2. Price decides to, okay, finally take us out. Okay, no worries. We got a 1 to ratio trade there. We're going to keep moving. Asian session's over. I took my sell trade for 1 to 2. And now we're going to get into London. Here is our London session getting ready to go. And boom. All right. New York's high is gone. We can take that out. These lows have not been taken out, so we leave them behind. We can take out this fair value gap because we don't need to worry about that. That trade's over. New fair value gap is gone. That trade's over. London high is gone, but we need to mark off Asia because the Asian session still gave us a high and low that we need to play off of. So we have the London time here. London. So we need to mark off Asia's high and Asia's low. So here was Asia's low all the way down here. We're marked off with green. So we can see how these lows are starting to stack on top of each other. We got Asia market opens up. So let's see if we do 5 upticks for a second. London opens. It's going to attack one side or the other. It's going to attack out the high or the low. We need to wait for which one. Now we're in the London session for gold. Looks like London hasn't taken out either. We're still waiting for our New York. Let's mark off our line. My New York open is right over here, so we're still waiting for New York to get started. London's just consolidating, not really doing anything. This is a key sign. So now with London consolidating, what are we going to wait for, ladies and gentlemen? An AMD concept. Now here's the AMD, right? We have the accumulation for London, just came in. We have the high and low just formed. We got the low. And then we have the high. On days like this, ladies and gentlemen, because London took out neither. So look at so remember the scoreboard we talked about? It was either 1 to 2 scoreboard or a 2 to 1 scoreboard. Well, guys, we have a 2 to 2 scoreboard. We're now 2 to 2. That means the market is in consolidation. This is considered trapped order flow. So when you have 2 highs and 2 lows between each other, so when you have 2 on 2 or you have 1 on 1, so you can have a London high. So you can have 1 London high against 1 London low, or you can have 2 Asia highs against Asia high, London high against Asia low, London low. So right now our scoreboard is 2 to 2. All right, so we have a 2 to 2 scoreboard. With a 2 to 2 scoreboard, we now need to wait. Price, New York, your New York session is going to do something called seek and destroy. It is going to seek one side of liquidity first and then go and destroy the other side. It is our job to wait for the market to go seek the area first. So now we need to wait for price to go seek out which side it wants to go. But also, remember what we have before, ladies and gentlemen. We still have an Asia high all the way up here that we still haven't taken care of at the beginning of the week. So think about this being the high of the weekly candle. We're now kind of floating between the midpoint of the weekly candle on the chart, right? So now we got an AMD. We have this consolidation coming in. We need to wait for price. All right, New York opens. Price strikes. Where did it go first, ladies and gentlemen? Oh my God. It went to the lows. that it hasn't taken out all week. Wednesday's lows, all these lows. Price went and did what? It took those out first. Accumulate. Oh my goodness. Manipulate, but where did it manipulate to? Previous session lows. So it didn't go anywhere random here. It went somewhere. Price went in and manipulated to these areas. Where's our area of distribution? Where's going to be our entry, Dr. Quinn? In the distribution phase. But where in the distribution phase? Right when price comes back above London's low. I'm now looking for anything bullish reversal or, open, sweep, gap. I'm looking for that bullish fair value gap, y'all. So do we get that bullish fair value gap? Let's find out and see. Price came back and retested the lows again. That's a double confirmation. Some of us can look at this right here and be like, we got a W. We got a W here. That's a good sign. And we got an SMT. Lows, went higher. So SMT, bullish SMT with a double bottom. We might be getting our entry, y'all. Let's do a little bit slower. Let's go to the 1 minute. Let's really snipe this thing. Back up. Wait a minute. Something happened. Our entry has presented itself. But why do I like this entry? There's a couple reasons I like this entry. Number one, who knows our candlestick confirmation patterns? This right here, ladies and gentlemen, was a bullish candlestick pattern. We got ourselves a morning star, right? Morning stars is when price is going to go upward. Evening is when price is going to come downward. So we got a bullish confirmation going up. And with that being said, you see how price is going to come back and retest this area. So let's go back a little bit. And let's play it a little bit. So price is going to come down into the range. Retested the Asia's low. So an aggressive entry would have been here. But let's say we're looking for that true bullish fair value gap, which is fine. Let's wait for it. So this is a little bit aggressive. That's okay. Let's see if we need one a little bit more conservative. You're still waiting. You're still waiting. That right there was another fake out to the downside. This was another aggressive price down to the downside. But look what price did immediately right after. Came right back above it. So you see how price wasn't really ready to sell. Price broke out of it. Now that price broke out of it, do you guys see the gap? Price has broken away from the gap and is heading towards the low. So I can look for a pullback entry there. So I can look for a long entry here for sure. If we get that entry, if we get price to pull back into that range, stops below the wick, targets, opposite highs. But even better, target the full swing, 3-1. So now we're still all in the manipulation phase. So this is one entry I could have taken. I'm going to put a blue line. I'm going to put a orange line here. So entry, there's one entry we could have taken if price decides to come back. And price decided not come back, left us. That's cool. That's one entry place I go to take in. Price is now back above what? London's low that we swept. So now we just wait for bullish confirmation. Price kept jumbling. This is a good trade too. Now we also can see, oops. So we don't get that entry. So this was one entry point. Price almost came in and got us. That's okay. You can see how price is beginning to ready to make its play. We continue. Break and retest. We're still on the 1 minute. We're watching. Maybe we need to start looking at the 3 minute. See if this is where you can start toggling between time frames, because look at the 3 minute. We saw something on the 1, but look what happened on the 3. Breakaway, bullish fair value gap. So I was so hyper fixated on the 1. This is why it's important for us as traders to always use multiple time frames. Because remember, I said entries are in between the 5 and the 1. So toggle between all 3. Because look what happened. Look what formed on the 3 minute time frame. There's that bullish fair value gap we look for. 1, 2. Price broke back above London's high. Price was bullish in its direction. Now you could have taken an entry. Stop loss below your wick. You could have been in the trade. So somebody on the 3 minute time frame is already in. Bullish fair value gap, same rules apply. Open, sweep, gap, entry. It's still applied. So let's continue to, so let's say somebody's in. I may not be in yet. I may have missed my entry. So where's another entry I could have taken the trade? Oh, wait a minute, y'all. Oh, didn't we mark off? Wow. Didn't we not mark? We marked off. Didn't we not mark off some fair value gap right here on the 2 minute, like literally on the 2 minute time frame? That price came back and pulled us into. So we missed that. So we could have held that entry. Somebody still would have been in this trade. I would have gotten that pullback. Price still pulled back in the entry. That's fine. So one person's in, the other person's in. That's cool. Still holding my trade. All right, I'm in. Somebody else is in. Price is still respecting these lows. Remember, price stop loss is below this wick. It's a sweep candle. I'm in consolidation. Holding out. It's gonna probably go take a little while. I'm already 2-1 for the week. Bam. Price again is playing with this London low that we drew. We're on to the next day's Asia, by the way. We're in this trade, mind you. We're in. But we're now into next day's Asia. Like, Asia's about to start again. Let's keep watching. Keeps on playing around this low. Just keeps on playing. Keeps on consolidating. Right? When you guys are in situations like this where price is consolidating, it's good to have these session highs or lows. Because now you can sit on your hands. Like, hey, we're still at the London low where I got in originally. So I'm still going to sit in my trade. I still have my stop loss below the wick. This is now where you guys can get comfortable swinging your setups, because now you can leverage. Look what price is doing. It's only bouncing in between session highs or lows. It's not doing anything fancy. Price came down, then it took me out. Now price is officially taking me out. Cool. But even then, I'm okay. I'm okay with that because I still allowed this trade to still pull me all the way back in. So my swing trade is out of proportion. That's okay, but aren't we still day trading? Aren't we still practicing our Asia high, Asia lows? It's still like that. So who's to say I still can't play off of that again? High. So let's see what happens during Asia now. Next day, Asia, my swing trade's out. I lost it. We're now moving into Asia session the following day. Price wicked me out. That's okay. I'm waiting for my next entry. So we formed Asia's low, which was here. These are all taken out now because they're irrelevant. Awesome. Asia decides to take out. Here's we're almost into London now. So now we've entered. All right, we're about to enter London. Asia formed its high or low. So there's Asia's low. There's Asia's high. London session is about to start. So here's our high now. We take these out because they're irrelevant. Asia formed its, now London begins. What's London going to do? It's going to attack one side or the other. London opens. Let's go ahead and get ready for New York. London's not really doing anything, right? We're just watching. It keeps consolidating, not really going anywhere, right? So we probably have another what, ladies and gentlemen? Probably another trapped order flow day is about to happen. So we already caught the play on one trapped order flow day. We may have another trapped order flow day, which means we need to wait for price to get the one side first before we take our trade. And I guess not. Oh, nope. We did it. It took out Asia's high. So now it took out Asia's high. Took out the high. Boom. Took out these runners. So it took out those highs. So now on a day like this, you see something like this go down before New York even kicks off. If you see like this before New York even kicks off, this is all London, by the way. I'm not in this trade, mind you. I'm not in this. I wouldn't be writing this out. I would just be watching this go down. Because my rule is this. Now when New York opened, I have a clear understanding of what price did. We just took out all those highs. Your mindset should be now, bro, I'm going bullish, gang. There's no way you're going to take out all these highs in one session. 1, 2, 3, 4 highs in one London session. No one should be thinking about sales at that point. There's way too much momentum at that point. All those highs have been taken out previously. So how is AE looking for a trade now? I'm looking for a continuation. So when I'm looking for price to continue, especially when rally goes off, I'm looking for price to still take for that open. So there's still the open. There's still the sweep. I'm now looking for a bullish gap to the upside to give me an entry, especially with all the momentum coming in off of London. I'm definitely not looking for a bullish play off of that. Because the thing is, price didn't take out one side of Asia and then come back down and play around like the other days. It went and was very violent coming through this. I'm not going to go against that bias. That's the day you're just like, yo, just don't go against the market. Let's just trade with the market at that. That's when the trend is your friend kind of thing. So I'm now toggling between the 5-minute time frame, the fifth. So I'm now toggling on days like that where there's a lot of rally movement. I'm toggling between the 15, the 5, the 3, and the 1. And I'm now looking for any signs of bullish fair value gaps that I can look for entries. And here's where I would have taken my play, my entry, my trade for the day. If I was going to take a trade on this day, we got the open of New York. We got the sweep up. But because we have this bullish momentum coming in, I'm looking for bullish gaps. Here's where my bullish gap would have been. So you have candlestick 1, candlestick 2, 3 candlestick structure. It pretty much crossed Asia's high. Here's London's high, but it crossed Asia's high like this. My entry could have been this wick or these candlestick entries here. I'm letting price continue to buy up. I'm going long on this day. Like I will go long on this. Price continued. I got myself a little bit of some bread. Maybe I lost the setup that day. Sticking to my rules. Sorry, where my stop loss would have been. My entry would have been here. Stop loss would have been below this market structure right here. Transparently. I definitely would have just transparently taken that here. So now price comes in. Take my setup. And now I just wait. Price was bullish coming in, pretty aggressive. It took out all those highs. Price dipped a little bit lower. And and then also as well, while I'm still bullish, guys, is because if price wanted to sell, it would have sold by now. Like, think about the last 2 examples we just did. Price was pretty aggressive selling right after it did its London sweep, right? But see how price swept it and kept consolidating around these areas? Look what day of the week we're in too. Friday. If you wanted to take a trade on this day, take that trade like that. A lot of professional traders, Fridays are no-goes. Fridays are no-goes for trades. But still, if we wanted to practice strategy and the rules applied, open, sweep, get your entry here. Here's another bullish fair value gap that formed over here to the right-hand side. So the gap formed here. And then you guys can see that we had this bullish gap that was formed here to here. Price entry here. You got another entry. So let's say we continue waiting for the rest of the day. I don't even know how gold ended for this week. So you could have been in longs. Just off this trend, it could have been in longs. Or it could have been, and now at this point, let's see what price did. Did price take us out? Did our stop loss get hit? No. Still in the setup. Sat on my hands. I probably would have had some drawdown here. See when the trade finally takes me out. Probably will take me out probably Sunday Open if I was in this trade. So, with that being said, y'all, I hope that still, like I said, that was a lot to give you guys in just 2 hours of time. But I hope this 2 hours was everything. Like I said, it was everything I can give you guys. There's really not much more after this. Just some kind of heads ups and some kind of rules or some things just makes for sure. If you guys are ever timid or scared with the setup or with the strategy I've given you guys, here's a couple tricks of the trade. So, a couple tricks of the trade to leave you guys with today before we head out. But I first want to tell you guys thank you. It has been an amazing 8 years of teaching with you guys. I hope this that is literally what I'm growing. Like that is literally what I'm working on. That is what I'm practicing. That is what I'm getting sharper on. All you guys can, if you guys can take that, apply that to options. Apply that to options. Are you guys in Portugal? Oh, I thought you guys were in Portugal, Quinn. Oh, I thought you were. Well, hi, Tony. But okay, awesome. But tricks of the trade, guys. Number one, if you ever get scared, wait. If you don't know where price is gonna go, wait for price to touch one of the session highs or lows first. London high or London low. Wait for price to get to one of those ranges first. And then wait for your bullish or bearish confirmations from there. Just wait for price to get to you first. If you have an A1 setup day for buys, is if you have an Asia high, a London high against a London low, price sweeps the London low, gives you a bullish reversal, target the London high, stop loss is below the sweep. That's an A1 setup day for buys. A1 setup dates for sells. If you have an Asia low, a London low, and a London high, price opens, sweeps above London's high, gives you a bearish fair value gap, take your entry, target the other end. That will be an A1 setup for your sells. Trapped order flow days, that's when you have either you have a singular London high against a London low, or you have an Asia high, London high with the London low, Asia low. That's a trapped order flow day. Wait for price to attack one end or the other, and then you can go wait for price to attack one end or the other, and then wait for your entry confirmations. Take your setup. When you guys are trading, stop focusing on your P&L. Forget your P&L. You need to be thinking about how many points can I consistently catch a day. Process-based thinking. 30 points, 20 points. If you're a futures trader, start with 25 to 40 points a day, every day. Don't care about your P&L. Focus on catching 25 to 40 points a trade every trade you take. One trade you take. For my Forex traders, if you're trading NAS, catch anywhere from 150 pips to 200 pips a day. Anywhere from $10 to $20 with a 0.01. That's a good trade. My gold traders catch anywhere from 150 pips to 200 pips as well for gold. So that can be anywhere from 40 to anywhere from 35 to 50 points on gold. Still a good setup. For my Forex traders, if you're trading GJ or AJ and things like that, get you anywhere from 50 to 75 points, 50 to 75 pips. I know for the JPY pairs, you get you good pippage there. You guys can leave it with that. So Risk management, guys. I always look at risk. Don't think about risk as your percentages. Focus on your risk or how much money you're willing to lose without losing any sleep. So like if you take a trade and you're like, okay, I don't know what 1% of my account is. I'm like, well, how much money would you lose? How much money would you lose on a trade that would make you cry? Well, I don't really want to lose any more than $50. Then there you go. There's your risk. Don't risk any more than $50. So I'll leave you guys with this before I disappear for the next few while. Um, Trading in the Zone, Chapter 1, first 30 days. Get that under your belt. Trading in the Zone, Chapter 1, first 30 days. Really get that under your belt. Japanese Candlestick Bible, really get that under your belt. Okay? Please get under your belt. I have been blessed with so much in my life with the understanding that I pray that people will really wake up to how trading should really be. Trading is bigger than the courses that you guys will pay for. I know I'm not going to be your last mentor. I know that you guys are not going to wait till 2027 to rock with me again when I open mentorship up in 2027. I know you guys are not going to wait. You guys are going to find somebody else. You're going to find a YouTube video. You're going to find some community, some group, because I know that you guys need that as people. We need it as people to be surrounded by those who love us, by those who don't belittle us, and by those who challenge our thinking. Please do not fall. Please, for the next 6 months, would you be available for questions? I will be available to those who have my number and only those who have my number. I will not be answering on social media. I'm pretty much going to be deleting social media. So only those who have my number will only be the ones who can message me directly. And if I don't hit you, don't take that as I don't love you. But I just don't want to respond to you right now. And that is not because I don't hate you. It's not because I don't love you. Just maybe I'm in a place of peace and I'll maybe just be gone. But just know I always get back to the people who message me. I do my very best. But yeah, outside of that, do not fall victim to the profiting of mentors. The profiting of trading is not what you want to fall in love with. It is the process at which the money is being made you need to fall in love with. If they say they have a strategy, ask them for their process, not their results. Hey, I saw that you made 10 grand on your social media post. Can you walk me through the trade setup that allowed you to do that? Oh, is this an every time thing or is this a was this a one-time situation? Because people build their strategies off of one-time situations and that's when people lose. Fall in love with the process. Long-term investing, buy silver, copper, ounces, pounds, stock up on silver and metal, HIMS, RXRX. Be careful in how you engage with the topics around AI because the AI conversation it has moved past building apps in ChatGPT. Please get over that. It is past that. You are now looking at AI is now running companies, entire infrastructures. I'm talking operators, sales teams, lawyers. AI is moving quickly. Get off of Facebook if you want to know about AI. I need you on Twitter and I need you in Reddit. That is where you'll get the most up to date, recent stuff that AI is dropping. You want to stay on top of AI, get off of Facebook, get off of Instagram. You need to get on Twitter and you get on the Reddit. TikTok is only good for so much. If you are trying to stay ahead of the curve, you need to start following government ran pages and or speakers of major banks hedge fund managers, and nonprofit organizers. I'll give you guys the groups that you need to start studying for the rest of this year. IMF, WEF. You need to study those two. The PIF, you need to study them. They have the I'm not gonna say the CIA and stuff like that, you know what I mean? But you guys already know. If you know, you know. You know, pay attention to those kind of people. You need to watch what they're doing because it don't matter what anybody else is doing. Pay attention. Um, some of my predictions for the rest of the 6 months, just to kind of leave it out there. Number one, Donald Trump is Jewish. He's a Jew. So because he's Jewish, I have more than enough fear that by somewhere in the next 6 months, we're probably going to attack Cuba. We're probably going to finish off Iran. Lebanon is going to get bombed the mess out of. Um, there's a secret Tuskegee experiment going down right now in Equatorial New Guinea in Africa. So that's something you guys want to be on the lookout for. That's where the next COVID virus is being tested, is down in Equatorial New Guinea over in Africa. They're calling it the new Tuskegee experiment, funded by Hillary Clinton. So that's going down. Immigration. So immigration is getting pushed onto you guys as a good thing. Immigration is a bad thing for economies. So the more immigrants enter into economy, the worse the economy gets. You can just study Europe. You can just literally look at the UK, look at Europe, look at Canada, look at Australia. If you want to know what's coming to the United States, study Australia, study the UK, study Canada. Canada is passing new gay laws, so expect the United States to pass new gay laws probably by the end of this year. You have the UK passing new immigration, so most likely you're going to see more stories about Indian people flooding towns, more stories about Jewish neighborhoods buying off people deeds off of black people, and you're probably going to hear more stories about not Indians, not Haitians, Sudanese, and Somalians. You're most likely going to hear something about Sudanese people, Nigerian people, Somalians, as invaders or immigrants. You're going to hear that from the white Republican side. That's what their whole base is going to be about. They're flooding immigration. They're flooding immigrants, flooding immigrants, flooding immigrants. It's true because it's happening. Just look up the Calgary Plan by the European Union or the replacement, the UN's 2030 agenda called the Great Replacement Theory. And the Great Replacement Theory is pretty much eradicating the European race. So pretty much eradicating blonde hair, blue-eyed white people like Sydney Sweeney, people like Nick Fuentes, people like Donald Trump. Eliminate people like them, and now everybody gets happy. No one. That's why you see the Democratic liberal base is always men are the problem. But what kind of men are the problem? White men are the problem. That's where that whole agenda is now getting pushed. So you have the Republican side dealing with immigration and a whole bunch of immigrants, black and brown people, flooding into their neighborhoods, while at the same time their wives and their daughters and their sons are becoming gay with transgenderism in the gay movement, and then their daughters are becoming liberal boss bitches because of Nicki Minaj, Cardi B, and Megan Thee Stallion and DEI. They're climbing the economic ladder, saying that they don't need no man, and now they're not producing children. But who's having more children than they are? Black and brown people, Indians, Asians, and Mexicans. So the whole thing that's happening, and then you have a whole bunch of rich white folk who are sitting in the U.S. government, who are senators and lawyers and judges and like the president, the speaker. They're watching their own kind disappear in real time. Have you guys noticed that? They're all watching it happen. But why aren't they stopping it? You would think that the most people that we vote for in power, why would they not want their own kind to prosper? White flight, white guilt, DEI, civil rights. They're too scared to even speak up against black and brown people right now because they've been indoctrinated just like how we have. Do not fall into the victim trap of Judeo-Christian BS. Don't fall for it. All of the politicians are going to push that BS for the next 6 months. We have the midterm elections this year. That means those senators and those House of Representatives, they about to give up them seats. it would be too coincidental if they extend the war in Iran so that Trump can stay in power and not lose his Republican control over the House and Senate. Wouldn't it be too advantageous to just call a ceasefire? Oh, a 2-week ceasefire, a 10-day ceasefire, a 7-day ceasefire. All we ceasefire our way all the way through the elections. It's probably what's going to happen. And while that's all happening at the same time, they're going to speak out the fact that, we're Judeo Christians. I'm sorry. When was the last time I checked? Roman Catholicism and Islam are two directly against Jesus Christ himself. So, and they're both being used as weapons to dismantle the Christian base. I don't know if you guys have been noticing that. Have you guys not been noticing that? They're using Islam. Oh, radical Islam. What? Radical Islam? Radical Islam is the problem. Radical Islamists. Yeah, radical Islamists are the ones that caused 9/11. If they were so radical, why aren't they over here in the US bombing our cities and yet we're over there in their deserts blowing up a desert? We keep blowing up deserts. We keep leaving, and it just so coincidentally, we just keep leaving weapons over there. Obama left weapons over there. George Bush left weapons over there. Oh, no wonder the Middle East is a whole bunch of mess. We keep bombing the mess out of them. And guess what we're going to keep doing? The same thing until the United States has Iran, Israel takes over Lebanon, and Saudi Arabia opens up its ports. And now Saudi Arabia becomes the now number one leading global oil producer. Because notice how Saudi Arabia ain't say nothing this whole war. They sit right there, right next to Iran. Saudi Arabia is like, next 6 months, the world that we know of media is going to change. I don't know if you guys know, Saudi Arabia now owns most of our sports media now, from the like most of our like media rights to like EA Sports and Madden and things like that. So Saudi Arabia is also in debt, like by $90 billion because they paid Cristiano Ronaldo, they built that golf league, they paid for Messi, they paid for all these people, and now because of this war, they're losing money. So be prepared for a lot of athletes. So your mommies and daddies are going to start talking about, oh, that one athlete or that one player, or a lot of social media is going to get hyped around athletes losing money and looking to come back to the PGA, looking to come back into, EA gaming, looking to come back to the US markets because Saudi Arabia doesn't have money to pay those athletes anymore. I would not be surprised. Next 6 months, I would be prepared for a couple more false flag operations, maybe one or two more school shootings, probably a couple more. It's coming. Something's gonna happen. Um, More land is going to get burned. I don't know if you guys have known that land is being burned all over the United States to build data centers. So that hasn't hit the news. From Nebraska to California to the Palisades, which we still don't know what's going on in the Palisades, to Hawaii, to Nebraska, to Oklahoma. I don't know if you guys have been paying attention to that. If you've been paying attention to the whole FIFA World Cup is coming to the United States, and we haven't seen any advertisements about it. I don't know why. Um, Epstein files are still a thing. Still haven't arrested anybody yet. But what you guys really are watching is the Epstein class protecting themselves because the Epstein files were so bad, we had to fake another moon launch. Oh, give you guys the rabbit hole about that whole Artemis thing. Look up the movie with Channing Tatum and Scarlett Johansson called Fly Me to the Moon that dropped in 2024, I believe. It talked about a project called Project Artemis, where they would use Hollywood to fake the moon landing. And the project was called Project Artemis. And the whole movie is about how Hollywood faked the moon landing. Isn't it coincidental that this new rocket launch was just called Artemis 2? Do not lose sight over the central banks and our dollar currency. All right. Do not lose sight over the currency of our dollar. It is still garbage. It is still garbage. Kevin Walsh, we got a new Fed chair coming in next month, I believe. He is going to change the way our economy is going to pump. Didn't Donald Trump say no interest rates? He's going to come in and give us no interest rates. When there's no interest rates, the money printer is on. Inflation is going, that means the Federal Reserve is going to start printing money. Cryptocurrency starts running. But because if there's more money being printed, the value of our dollar is also decreasing. So pay attention to the Federal Reserve. I would say we got the Fed charge going on this month. I predict in the next 6 months we're going to have a Democratic House and Senate. I don't think the Republicans are going to hold office. So Donald Trump is pretty much screwed. Uh, and then what else? Like I said, false flag operation. Eli Lilly and some other pharmaceutical companies going to launch a whole new wave of beauty brands for women, some kind of new gummy or some kind of new GLP for the holiday season. I already know that's probably going to go down. You guys already know. Um, yeah, man. I just hope and pray that you guys stay locked in. Stay locked in. Stay close to Jesus. I'm not a fan of the church. I'm a fan of Jesus. Because the church conspired against kill Jesus. The church was definitely a part of that smoke too. So with that being said, do not fall victim to these churches, y'all. Stay close to Jesus and hit what that man is doing. I have as well, honestly, for those who message me, I have the Book of Enoch. I have the Book of the Dead Sea Scrolls. I have almost all of the lost books of the Bible except for the Gospel of Mary Magdalene. If you guys want those lost Gospels of the Bible that were stripped, and these are versions from 1880, so these are like originals. If you guys want some originals of original biblical editions, just let me know. I'll give you guys that as well. Last thing I'll leave you guys is biohacking. There is going to be a wave of people who are going to dive deep into the whole longevity biohacking kind of world. What I mean by that is Oura rings, Strava running apps, Whoop bands, those kind of things are going to become very popularized for the rest of this year, especially with the new iPhone coming out, the new iPhone stuff. Do not pay attention to the technology. Do not pay attention to the object itself that starts getting released. Start paying attention to the technology that's coding it, and then who are the developers who's coding that. Those are the people you want to pay attention to. All right, so um, thank you guys again. I wish you guys nothing but the best. I wish you guys so much good luck in your trading careers, in your years. I I don't know when I'm going to be back. I really don't. 6 months is really the goal, but God is going to. My goal is 2027 to come back. I want to give myself to that time, but like I said, stay in tuned. I will be dropping a video in 2027, probably top of the year, so it will be at least something. I love you guys. Take all of my knowledge, run with it, run with it, run with it. Study, 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 study. Don't get distracted. Who gives a fuck? You need to lock in on what the fuck you want. It is all you. There's no one else can take it from you. No one else can give it to you. You better get your ass up every day and hustle for this shit. This is the you got a solid 2 years left before this world really changes forever. They talk about Trump being the last president for real. And I damn near believe that. Just the way that AI is moving and how discombobulated the streets are and people really can't get along and we're bombing everybody. Like, I pray you do not fall in love with the prophets. You need to fall in love with the process as much as you can. Stay true to who you are. Pray, drink water, get yourself a parasite cleanse, get that nasty shit out your body. Read books, write, learn a new language. All the skills they're taking away from you, learn those skills. I'm learning a new language. I'm 27. F it. Learn a new language. Learn how to dance. Learn how to do a backflip. Start martial arts. Do, you know what I'm saying? Do something that you haven't done that you know your kids are not going to be able to do. Let you be that person. Trade, withdraw, withdraw, withdraw. I'm learning Chinese. So withdraw, withdraw, withdraw. Do not become a master depositor, become a master withdrawer. And I'll leave you guys with my mantra. Dear God, thank you every day for giving me another opportunity to remind myself that I can only control how I get in, how I get out, and how I exit. But the outcome is always up to you. That is my mantra and prayer every single time I get into a trade. Steal it, use it. I love you guys from the bottom of my heart. I will see you guys next year. So, bye, everybody. I will see you guys. I'll see you guys next year. So, bye, everyone. Love you guys.